BMW has announced its withdrawal from the price war. In just 2 days, we sold 3 out of the 5 BMW 3 Series and 5 Series cars in our dealership. When prices drop, everyone waits, but when they rise, people rush to buy. I've noticed that Chinese consumers, whether buying houses or cars, prefer to buy when prices are rising rather than falling. The prices at BMW dealerships have indeed increased recently. A friend of mine wanted to buy a brand new BMW 530 Li. A while ago, the price for a 5-year installment plan was 360,000 yuan. Recently, he went back to the dealership, and the price had risen to 378,000 yuan, an increase of 18,000 yuan. To avoid further price hikes, my friend quickly placed an order today.
After a series of price wars, BMW China has decided to step back. Since July 1st, BMW's 4S dealerships have seen various degrees of price increases. Some people regret not buying a BMW earlier, considering previous discounts as a great deal. On July 11th, a well-known auto blogger, Sun Xiaojun, posted on social media that BMW would reduce volumes to maintain prices due to severe losses from the price war. BMW China responded on July 12th, stating that in the second half of the year it would focus on business quality and support dealers in steady growth, implying an end to the price war. In recent years, the price war in China's car market has intensified, forcing even luxury brands to lower their prices. However, BMW and other traditional luxury brands have found that simply lowering prices did not lead to the expected sales growth and harmed their brand value. BMW's exit from the price war seems like a wise move. On July 15th, a salesperson at a BMW 4S dealership in Beijing's Chaoyang district told a reporter that the prices of all BMW models had increased by 30,000 to 50,000 yuan. The dealership couldn't continue with large discounts, which had been causing losses for dealers. Previously, the BMW i3, which was very popular at around 170,000 yuan, now sells for over 200,000 yuan. It's worth noting that the price increases and models affected vary by region. Some dealers hinted that prices might continue to rise to more normal levels from 2 to 3 years ago. A BMW salesperson said that currently they lose about 30 to 40,000 yuan per car, with the 3 Series losing around 20,000 yuan and the X3 and 5 Series losing 30 to 40,000 each. The news of BMW China exiting the price war recently became the top search on Baidu. Some commenters praised BMW for not wanting to play in the chaotic price war, calling it an admirable stance against market saturation. Previously, BMW adjusted prices annually, but it did not attract as much attention as this year. The price war stimulates consumption and keeps overall car market sales from declining. However, the cost is reduced profits for the entire industry. Many industry experts believe that BMW's price-cutting strategy in China did not lead to sales growth, but diluted its brand effect. In the first half of this year, BMW China sold 376,000 cars, including BMW and Mini brands, down 4.2% year-on-year. In the second quarter, sales fell by 4.7% year-on-year. In contrast, global sales of the BMW brand increased by 2.3% year-on-year in the first half, approaching 1.1 million units, with electric vehicle sales up 34%. China was the only market with a decline, reflecting BMW's sales challenges amid the rise of domestic electric vehicles. In China, domestic car brands frequently lower prices to stimulate consumption. This wave of price cuts has dragged down joint venture brands, luxury brands, and even ultra-luxury brands. In June, BMW significantly slashed the prices of its electric vehicles. The BMW i3, listed at 353,900 yuan on the official website, was sold for about 170,000 yuan for the base model. The BMW i5, listed at 439,900 yuan, was sold for about 300,000 yuan for the base model. The actual price dropped by more than 50% from the official listing, and the new i5 saw a price cut of over 30%. Besides electric vehicles, BMW's fuel car prices were also unstable. Models like the 3 Series, 5 Series, 7 Series, X1, X3, and X4 fell below the suggested retail prices, with discounts starting from 100,000 yuan, hitting the lowest prices ever. Since last year, BMW has used steep discounts to compete in the market, offering an annual discount rate of 17.7%. The result was significant losses. To recover, BMW plans to exit the price war and restore its brand value, but whether this strategy will succeed remains to be seen. Some commentators believe that BMW's decision to withdraw from the price war was a reluctant move. They argue that severe losses mean that selling more cars leads to more losses. Therefore, it is better to sell fewer cars or not sell at all to maintain profitability. After all, after-sale services can still generate income for the dealerships. Further price reductions could push BMW out of the luxury car market, damaging its brand positioning and significantly lowering its brand value. The key issue is that BMW's target customers are not price-sensitive, making price cuts an incorrect strategy from the start. It's not too late to correct this mistake. Industry insiders also suggest that after the recent significant price cuts, BMW has likely cleared enough inventory of certain models to acceptable levels. Therefore, to protect its brand and profitability, it has stopped the discounts and promotions. Finance expert Zhou Shengguang has over 20 years of experience in luxury car dealerships. He told a media outlet that BMW is rescuing its dealers and itself. He explained that BMW's strategy of exchanging price for volume failed. Sales did not increase and instead declined, and the entire pricing system collapsed, resulting in severe losses for dealers. Zhou gave an example. If a BMW dealership sells 200 cars a month with an average loss of 40 to 50,000 yuan per car, the dealership would lose 10 million yuan per month. Such losses cannot be covered by profits from after-sales services, leading to potential monthly losses of around 5 million yuan. The problem is that despite significant losses, sales did not increase, so the manufacturers do not have the funds to subsidize the dealers, leading to continued losses and potential closures. This issue is not limited to BMW. In the current highly competitive domestic car market, all luxury car brands face the dilemma of choosing between lowering prices to maintain sales volumes or maintaining brand value without price cuts. On June 13th, a reporter visited Audi dealerships in Beijing. The salespeople said that discounts on electric cars were significant, and discounts on gasoline cars were even greater. For several models, the discounts were over 100,000 yuan. The salespeople also mentioned that they could offer even larger discounts if buyers were serious. Whether it's BMW, Mercedes-Benz, or Audi, the successive waves of price cuts in the Chinese car market have made life difficult for many dealers. A salesperson at a Mercedes-Benz dealership complained to the media, saying that many models were being sold at a loss. For instance, selling a Mercedes-Benz C-Class car would result in a loss of 70,000 yuan, which is not sustainable. Reports also indicate that the massive discounts on the Mercedes-Benz EQ series have caused significant losses for dealers. The Mercedes-Benz EQE, priced at 478,000 yuan, is now being sold at around 60% of its original price, a rare discount in new car retail. Since its launch, the EQE has performed poorly in the market. Dealers heavily discount the model to exchange for sales rebates, causing severe price inversions and significant financial pain for dealers. In recent years, Mercedes-Benz popularity in the Chinese market has gradually declined. In 2022, its sales fell by 0.9% year-on-year to 752,000 units, and in 2023, sales further declined by 2% to 737,200 units. Additionally, second-tier luxury brands like Lexus and Cadillac, as well as mainstream joint venture brands such as FAW Volkswagen, FAW Toyota, GAC Toyota, Beijing Hyundai, and Dongfeng Honda have also significantly reduced profits, with discounts ranging from several thousand to tens of thousands of yuan. In June, the topic Porsche price cuts became a hot search. Porsche dealers in some regions significantly discounted SUV models Macan and the all-electric sports sedan Taycan, offering up to 30% off. For example, the Taycan was priced starting at 629,000 yuan by dealers, about 270,000 less than the suggested retail price. Some Porsche stores also offered large discount coupons worth 99,999 yuan and 88,888 yuan, coupled with installment loan plans. In the first half of this year, Porsche sold 26,650 cars in the Chinese market, a year-on-year decline of nearly 40%. The Taycan was a major drag on sales. Porsche's struggles in the Chinese market are not new. In 2023, China was the only market where Porsche saw a decline in sales, with a year-on-year drop of 15%. This marked the second consecutive year of declining sales in China, and the Chinese market's contribution to Porsche's global sales has fallen to less than one-fourth. The significant drop in Porsche sales may reflect the broader challenges international luxury car brands face in the Chinese market. The price war for new cars has also affected Porsche's used car retention rate. According to the latest data from the China Automobile Dealers Association, Porsche's retention rate in June was 74.5%, down 2 percentage points from the previous month. Last year, Porsche's retention rate exceeded 80%, making it one of the most value-retaining luxury brands. Other ultra-luxury brands have also seen sales declines since 2023. For instance, Lamborghini sold 845 cars in the Chinese market in 2023, a 16% year-on-year decrease, and Ferrari sold 1,490 cars, a 4% year-on-year drop. Auto analyst Ren Wanfu noted that luxury car brands are lowering prices due to several factors. Domestic brands are moving upmarket, autonomous driving technology is rapidly evolving, and new car manufacturers are emerging quickly. Additionally, consumers' desires to buy cars is not as strong as before, resulting in poor sales for luxury car brands and increasing pressure on their dealers. Recently, besides BMW clearly exiting the price war, Audi and Mercedes-Benz have also quietly tightened their pricing policies. This is a collective response by luxury car brands to their current market environment and an effort to maintain their brand value. Audi dealers in Beijing's Chaoyang and Fanshan districts confirmed that Audi implemented a new pricing strategy starting July 5th. The landing price of the Audi A6L A5 TSSI Quattro is around 380,000 yuan, about 10,000 yuan more than last month's terminal price. The dealer confirmed that the price increase is lower than BMW's, only 1% based on the suggested retail price, and prices will gradually rise. A salesperson at the Mercedes-Benz dealership in Chaoyang stated, "We haven't raised prices yet, but we have received notices that prices will increase later, though the specific time and amount have not been disclosed." Recently, the Mercedes-Benz model with the largest discount is a C260L, with a landing price of around 290,000 yuan, about 65,000 yuan lower than the suggested retail price. The price of the luxury Mercedes-Benz E300L is relatively stable, with a landing price roughly equal to the retail price of about 520,000 yuan. As car companies continue to slash prices, the end result of the price war will not be a thriving market, but rather a bleak one. These luxury brands seem to have realized that a prolonged price war is not sustainable. Veteran auto industry expert Niu Xiaofeng believes an even scarier scenario is possible. If this trend continues over time, they might even withdraw from the Chinese market. When will the price war end? In a report released on June 24th, predicted that from the second half of the year, the price war China's new energy vehicle market would ease, focusing on a few major manufacturers rather than the entire industry. At the beginning of the year, domestic brands like BYD started a new round of price cuts in China, showing how severe the competition within the Chinese auto industry has become. The profit margins are shrinking, making it increasingly difficult to achieve profitability. Car dealers, especially those primarily selling traditional fuel vehicles, are facing significant drops in profitability, strained relationships with manufacturers, and are teetering on the brink of collapse. Market anxiety continues to spread. A car dealer in Chengdu, Sichuan, complained that the market is too tough now. Even luxury brands can't hold up and have started offering 50% discounts. Dealers are not making money, and some are even incurring losses. However, closing down and exiting the sales network could lead to even greater losses. He said, "We can't afford to lose, but we also can't afford to close down. It's painful." Many netizens in the comment section pointed out that weak consumer demand is a widespread issue. An investor in car dealerships mentioned that stores often fluctuate between losing and breaking even each year, with losses around 1 to 2 million yuan. However, if they exit the network, the losses could reach tens of millions of yuan. Additionally, a store often employs dozens to hundreds of staff, and compensating employees if they exit the network could amount to tens of thousands of yuan per person. The huge sums make it unbearable for dealers, leaving them with no choice but to run away. This directly harms consumers. On May 9th, multiple car owners complained on social media that a 4S dealership in Hebei, Henan, suddenly closed down and their deposits could not be refunded. 1,000 car owners were affected. The current market downturn is hitting even luxury brands, known for their strong risk resilience. For example, Porsche, a symbol of wealth and status, usually commands high premiums and has no trouble selling cars. However, this year, even Porsche is struggling, forced to sell at a loss. Some Porsche dealers have started protesting and resisting by halting car orders, demanding that Porsche headquarters subsidize the losses from new car sales and replace relevant executives. To address the issue, Porsche headquarters sent an investigation team to China to understand the situation. They pledged to communicate with each dealer to help optimize inventory and cash flow and plan to adjust Porsche's sales targets in China for 2024. Thus, some predict that Porsche might be the next luxury brand to exit the price war. A luxury car salesperson with over 10 years of experience often reminisces about the days when luxury cars sold well. He recalled that around 2011, newly graduated university students would quickly take up their posts after a month of training. Buyers of Porsche and BMW were lining up to place orders, and salespeople didn't need to explain much. In the current economic downturn, people are concerned about the economic outlook, and many Chinese are becoming more cautious with their spending. The market is only so large, and considering the parking difficulties in Chinese households, most families only have one car. The middle and upper income markets are almost saturated, with a population of 1.4 billion and a current car ownership of 319 million. It shows that the appeal of cars is quite limited. More importantly, people's incomes are limited. The remaining lower and middle income groups often have monthly incomes of just a few thousand yuan, making it impossible to buy a car.